All right, let's talk about a name that I'm willing to bet is in your kitchen cabinet right now. McCormick. Yep, the global leader in all things flavor. But the big question is their business as hot as their spices? Let's find out.
I mean, you've seen this logo everywhere, right? On your black pepper, your Old Bay seasoning. It's just one of those names you instantly know.
But, behind that familiar spice rack is this massive global company. So today we're going to peel back the label on their latest numbers, their first quarter performance for 2026. What's the real flavor of their financial results? Let's get into it. Okay, so to kick things off, let's just focus on the one big headline number that really jumps off the page from their latest report. And here it is, a massive 16.7%. So what is that? Well, that's their net sales growth for the first quarter of 2026. Now, look, for a huge established company like McCormick, seeing a number that big, it really makes you lean in and ask, wait, what's really going on here? And this is where the story really gets interesting, because a big, flashy headline number like that, it almost always hides a much more complex picture. So let's dig in. Where did all that growth actually come from? Okay, so we're going to break down that 16.7% into its key ingredients, if you will. We're talking acquisitions, price changes, and the actual volume of spices they sold. But hold on, before we look at the chart, we need to understand a really important term: organic sales growth. All this means is, how is the company growing from its existing business? It strips out all the noise from things like new acquisitions. It's the true health check of the core company. And boom, this chart tells the whole story. Look at that huge slice. 12.4% of that growth came from an acquisition. They bought another company. Then you see they raised prices, which added another 1.9%. But here's the kicker. The actual amount of stuff they sold, it actually went down a little bit, by 0.7%. So the takeaway here is absolutely crucial. That massive headline number wasn't really about selling more bottles of paprika to more people. It was mostly about buying another company. And that distinction is everything when you're trying to understand how they're really doing. All right, now let's add another layer to this. Because McCormick isn't just one single business, you can really think of it as two different companies under one roof. And understanding that difference gives us an even clearer picture. On one hand, you've got the consumer segment. Super simple. That's the stuff you and I grab off the shelf at the grocery store. But then you've got flavor solutions. This is the B2B side. They sell ingredients to restaurants and other big food companies. And as you're about to see, these two sides of the business are telling slightly different stories. And here's how that breaks down. The consumer side, your kitchen cabinet stuff, grew by 1.8% organically. Hot sauce was a big winner, but mustard sales were kind of weak. Now look at flavor solutions. It only grew by 0.5%. They did well with some branded restaurant chains, but they saw some softness from their quick service customers. Think fast food chains. Okay, so with that internal breakdown in mind, let's zoom out a bit. Because, of course, no company exists in a bubble. What's going on in the wider economy that's putting pressure on a company like McCormick? Well, like pretty much every other global company right now, they're navigating some serious headwinds. You've got cost volatility, which just means the prices of their raw ingredients are all over the place. Then there's pressure on consumer confidence. People are being careful with their money. And of course, you have geopolitical conflicts that send ripples through the entire economy. So how are we, the consumers, reacting to all this? Well, we're definitely focused on getting more for our money. But there's one big trend that's still going strong, and it's a huge win for McCormick: cooking from scratch at home. And it makes sense, right? More home cooking equals more demand for spices and seasonings. So you take all of that, the big acquisition growth, the kind of flat organic growth, and this tricky economic backdrop. And what does it all mean for the rest of the year? What are they telling investors to expect? Well, the company is actually holding firm on its forecast for the full year. They're still expecting that core organic sales growth to land somewhere between 1% and 3%. And check this out, they're projecting really strong growth in their operating income and earnings, mainly because of cost savings and, you guessed it, that new acquisition.
And their CEO, Brendan Foley, sounds pretty confident. He basically said he expects things to get better and better as the year goes on, thanks to them investing in their brands, rolling out new products, and just getting their stuff into more stores.
So really, it all boils down to this one central challenge. McCormick has been really good at using price increases to grow their sales numbers. But with the actual volume of stuff they're selling slightly down, their biggest challenge isn't just selling for more, it's about selling more, period. And that is the real story to watch for the rest of 2026.